But with this, viewers, let's move on and let's put the spotlight on Mahindra Lifespace developers because that was also one of the earnings candidates. So let's get on board Mr. Amit Kumar Sinha, who is the MD and CEO of the company. Hi, good morning, and thank you so much for your time. Firstly, when I look at your numbers, then your Q4 sales, though, that has done better, but the number has slipped 3% on a YY basis. Give us some sense that what is the market looking like to you right now? Where is that we are getting to see the demand, and what is the outlook going ahead?
So thanks for having me. Yeah, we had, I would say, strong results. Overall, if you look at not the quarterly, but full year outlook, we had a 20% plus growth on our pre-sales. And then we have additional IC business, which is consistently giving us 400 to 500 crores. So this year we were close to 500 crore. But to your specific question on this quarter, we are seeing, a little bit slowdown in the Q4 of financial year, and it's driven by the approvals, not necessarily by demand. We also got some approvals which were a little bit delayed compared to what we had anticipated. So if you get enough time, you can actually get more time for the sales team to convert the demand that exists into the pre-sales numbers. I think we got the approval for one of our big projects in mid of February. So barely had 5-6 weekends to actually convert that into sales. So you're seeing that, but despite those constraints, we had 1,000 crore plus quarter. The core Q4 was quite good for us. And then the approval that we got will carry us well into the next financial year. Overall, Mumbai and Pune has seen a little bit of slowdown on approvals, but Bangalore continued to be very healthy. We received additional approvals for RERA at the start of this month. So hopefully that Q1 will actually carry us through, which was expected in Q4 of last financial year. So overall, we see continued momentum, and we're seeing huge amount of shift from Category C, Category D builders to Category A builders, which have a good track record, good brand name, and they're able to pull customers from different segments.
Can you tell me the exact revenue booking which you've done in Kandivali? The project, at what stage it is? When will, as per the RERA laws, the real income will start kicking in? Because that's the delta for you now.
Yeah. I think you're right. In this business, the accounting is very different than the reality. It's delayed. The impact of Kandivali project will be seen when the project gets an OC. And this project was done in 2 phases. Phase 1 was almost a year back, and the phase 2 was Q4 of last financial year. Our expectation is that the F28 or 29, that's the time frame we'll get the OC, and that's where when we'll start to recognize the PAT in our books. The phase 2 would be slightly, probably a year later.
So progressively then Kandivali will start kicking in from second half of this year, and it would be what, 10% of project cost will get blocked for next 2 years, right? And that's how it will work? How will it work?
No. So you're asking the PAT or you're asking about the operating cash flow?
No, PAT. I mean, that's what it matters.
PAT will only come in. PAT will come in only in 28, 29.
Okay.
Because you have to get the OC, and that's the challenge of this accounting system that we are into. The cash flows have already come in. Our operating cash flow, as you see, has gone up significantly, 30% increase compared to last financial year. And Kandivali contributes a lot to that. It funds the construction, it funds all the expenses. But my recognition of PAT only happens in 28, 29 when I get the OC.
Is the Kandivali project giving you confidence that you need to now perhaps take more big bets in this entire Mumbai region? Are you confident that you will be able to do more JVs, more joint developments, more fresh developments? I mean, how will this experience change? Because I look at Mahindra Lifesciences as a Mahindra Group company, but it has presence only in Pune and Mumbai. I mean, Mahindra Lifesciences by now should have been Mumbai, Pune, Chennai, Kolkata, Jaipur, Ajmer, Indore, Surat. It should have been everywhere.
Yeah, let's start with, you're saying life sciences, it's Lifespaces. So you have to earn your recognition of our brand as well. And you're absolutely right. We are in 3 major cities. So once I came in, I've consolidated the presence into 3 cities, Mumbai, Pune, Bangalore. And we have land in Chennai and Jaipur. So 3+2, you can say. In NCR also we have a project. We've done project in Hyderabad, Nagpur. We're consolidating them into a few cities. This is a business of depth rather than breadth. So let's go deep in these markets. And then you're absolutely right. We have the brand, we have the scale, and we now have the ambition to actually take this brand to a different level altogether. And you see that in the past, we used to do GDV of roughly 700, 800,000 crore a year. In my first year, FY24, we did 4,400 crore and of GDV. And the last financial year, F25, we done 18,100 crores. So that's 16 times the average that we had done in, let's say, past 10 years. That's a significant amount of GDV land bank that we have secured over the last 24 months. And that gives us confidence exactly to the point you made from Vista, that if we can do a project like Vista, which is 2,500 to 3,000 crore of GDV, convert into sales very quickly, why can't we do other projects? And that's why Bhandup was a 12,400 crore project for us, is a project for us. And similarly, Lokhandwala, which is a big redevelopment, is more than 2,000 crore. Mahalakshmi is close to 1,600, 1,700 crore. So we have just really gotten after our aspiration in a big way. And you'll see more positive and exciting news to come with respect to Mahindra Lifespace brand.
A simple question. If I, we had the management of Shriram Transport Finance just before you logged in. And he's talking about slowdown in the economy, which has impacted them. HUL is saying the same. Food companies are telling me the same. Car companies are also feeling the heat. How come the real estate segment per se, which is very sensitive and very sensitive to both interest rates and affordability, has not seen the impact of the economic slowdown? Yeah.
No, it's a great point, but I think I will highlight real estate is a very local business, and you see the impact at a local level rather than at a national level. And then it's a segment level, like affordable, even though we felt that affordable segment should be growing, but in the last upcycle, affordable actually segment degrew. It was roughly 50% of market. Now it's 1/4 of the market in terms of volume. Value-wise, it's even lower. So, it's even in the peak cycle, that's what happened. The luxury segment really went crazy, which luxury segment defined as apartments over 5 crores in rest of India, but Mumbai and NCR 10 crores plus apartment. That just became 10% by value, 1% by volume, 10% by value. But the mid segment, which is mid premium and premium, where we play, has continued to be healthy, and it has gained market share from affordable in a significant way. So there are people who are between 1 crore to 5 crore, professionals who really want to post-COVID own a home, upgrade their homes. So we're seeing that a huge end user demand that continues to exist. And we feel that while there is a demand, there's also a shift from what we call flight to quality. There has been bad experiences by many of the consumers, customers from, let's say, from some developers who didn't meet their obligations. Like that's why you see shift from category C, category D developers to category A developers. Brand developers, part of Mahindra Group is one of them. They see that we are secure. We trust these brands. If you ever want to take buy a in construction project, we need to be very comfortable with the brand. And that's what we're seeing. The end user demand will continue to shift towards the bigger brands. These two factors are critical for the real estate segment. And I hope the interest rate will come down further. It will make up for some of the impact that you see because of the slowing economy. But we sell 5 lakh homes annually in this country. China is more than 1 crore. And a country of similar size continue to have a huge demand.
All the best for that, for tapping the big demand that is there in India, especially in the cities like Mumbai, Pune, and the one that you are diversifying as well. Thank you so much, Mr. Sinha, for joining us on ET Now this morning to talk about the earnings.
If you like this video, then like, share and subscribe to ET Now.